big move took place in the world of crypto market yesterday. Ethereum, a decentralized open source blockchain, switched to a proof of stake consensus here algorithm from proof of work. It is anticipated that the move will reduce energy consumption used by 99.95%. Now, what does that actually mean, and what shift are we talking about? How will it change the entire dynamic of cryptocurrency and this entire market? To discuss all of this, we are joined by Naimish Sanghvi, founder CoinCrunch India. Naimish, good evening and welcome to the show. First thing, because this is an entire technical aspect that we are talking about, especially about Ethereum's upgrade. What does it actually mean? Can you translate this and help us understand in a very layman term, how will it impact the entire crypto market?
Absolutely, Kavita. It's good to be here. Thank you for having me. So the news is out there. Ethereum has successfully moved from a proof of work to a proof of stake consensus. What it means is Ethereum earlier used to be mined or created, or the transactions on the network were approved by something called as proof of work consensus. Every time a miner wants to include a transaction into a block, they have to solve a mathematical problem. They have to find a value that roughly takes about 15 seconds to find. And they have to find that value and add it to the block, which is the proof that they have put in the efforts or they've put in the work to find this value. Now, to say it like this, it's oversimplified. Finding that value takes huge amount of computing power. That would be in tera hashes. That's not even something that we use practically. The energy required for that. So right now, the transition from proof of work to proof of stake is we remove this computational requirement in terms of mining Ethereum. So what we've done is we've reduced the requirement for electricity that was going into finding this one mathematical problem solution, which was running millions of graphical processing units, or GPUs, or graphic cards as we say commonly. Millions of graphic cards were operational at any given point of time to solve this problem and keep the Ethereum network running. We've removed that now. Now Ethereum is proof of stake, which means that people who are mining Ethereum have to actually now stake or lock their Ethereum into the network, and they will be randomly given an opportunity to add transactions into the network. And they don't have to use any graphical processing units, GPUs, or any mining or any computers. There's just one locking of Ethereum, and they will be randomly given the opportunity to mine a block. So that reduces the electricity consumption, as you said rightly, by about 99 or 99.5%. In fact, by some estimates, Ethereum is now using 0.2% less energy than it was of the total energy in the world. So it was consuming that much energy, and now it's stopped consuming that much energy. So we've moved on from highly high requirements of electricity to now simply a proof of stake model, where people are given the opportunity to mine the blocks if they choose to lock their assets for a very long time on the network.
So does this also mean that Ethereum will be better than Bitcoin, or this question doesn't make sense?
Right. So I've been asked this question multiple times by our community and also other people. We have to understand that there is a fundamental requirement of proof of work consensus, as in, this computational power that I was talking about in Bitcoin, because Bitcoin's sole purpose is to be a digital asset or a digital, cash. Right? It doesn't work the same way as Ethereum. Ethereum's purpose is to be a computer that an open computer, a decentralized computer that other people can build on top of it. That's not the purpose of Bitcoin. So in order to keep Bitcoin secure and to keep ensuring that people have the right to opt in and opt out of it, there has to be an entry barrier. There has to be an energy requirement for that. Hence, Bitcoin should remain proof of
Okay.
work. It will not overtake Ethereum. It's two parallel systems. Ethereum is a computer, as I said. It's where you build smart contracts. It's where you build applications on top of that network. You don't do that on Bitcoin. Bitcoin is simply for transactions between two addresses, and that's pretty much it, right? And to keep it secure, keep it away from any influence, it has to be proof of work. But Ethereum doesn't need that type of even if there is an influence, it's actually the projects built on top of Ethereum that makes more sense to people. So Ethereum can be proof of stake, and that's the direction it should take, because there will be more and more and more development on top of it, right? So for me, they are two separate.
Okay.
I
Okay.
don't think Ethereum is going to overtake Bitcoin. Sorry. Yeah.
Okay, so but talking about acceptability, will you be seeing Ethereum now being accepted more than Bitcoin, or they are just not, because you just mentioned or explained that they are two totally different type of coins you're talking about, so they work in a different way, and the acceptability of different countries and people is not going to actually impact.
Right. So Bitcoin is designed to be cash and asset. So the acceptability of Bitcoin it has a higher chance. Ethereum is like gas,
Okay.
right, or petrol. Like you're driving a car, you need Ethereum, or you need petrol in that car to get it from one place to another. So Ethereum is like that. You need gas in Ethereum network to take it from one place to another. So it has a use case, and which means that it should not be used as cash. It should be used to process these transactions that want to go from one place to another. So the acceptability of it
Okay,
as
okay.
money is highly unlikely.
All right. That's the bigger headline from the crypto space. But apart from that, let's talk about the entire crypto market and the kind of changes, volatility it's actually witnessing. Specifically, talking about crypto winter that we've been discussing so many times, Naimish. I also happen to interact with a few investors and young investors. I'm talking about. They have somehow lost their confidence in the crypto market and slowly moving towards equity. What kind of trend here are we talking about? Looking at this kind of a scenario, are you witnessing the same kind of coldness among investors when it comes to crypto investing?
Right, Kavita. So we have a joke like inside the industry that people we find out who are the tourists in the crypto winter, right? So they flock away from it as soon as the winter sets in. So it is
Right.
absolutely acceptable, because at the end of the day, a large number of people join the industry to make money, not really aware of how to build on top of it. Those who stay back, put in the effort to understand how things work and maybe find a way or find a solution to build, and then stay here and help the community build that thing, right? But a lot of people who are here to just simply speculate or make money, and there's nothing wrong with it, are not going to see any importance of crypto industry in crypto winter, because everything is falling down, or maybe they are going to stay at the same levels for months to come. So for them to move on to equity makes sense, because while it's not as volatile as crypto markets, but there is some movement over there that excites them every day. And a lot of crypto people that I follow on Twitter and other social media have also started, talking about the equity market. So I think the trend is there. I think the data that you have is perfectly spot on, that people are slowly talking about equity and Nifty and Bank Nifty and Sensex and all of those things now.
All right, so I can also sense that you are not really worried about this new trend and even the crypto market state that's going on slightly looks like a medium term outlook, if I'm not wrong. How long do you think this is going to stay there, and investors should just stay put and not worry much about it?
Right. So honestly, the biggest brunt that people take are the people who are retail investors, right? If you see, institutional
Right.
investment is not hugely affected, barring a few examples that happened recently, but they are very strong about their positions in crypto right now. So the retail investors are the ones that bear the brunt, and I feel like the next stage of crypto will be to protect retail investors in some form, right? So once we have figured out what works in that direction, I think we should be back on the bull market. Usually these cycles last about 2 or 3 years, but over time, we have seen that the time of these cycles, the bear markets have reduced. So maybe the last one was about 2.5 to 3 years.
Right.
Maybe this time the crypto winter will go on for a year or year and a half, and then we will see a turnaround soon. But I really feel that if
Okay.
you if you really grill down the data, it appears that the retail investors take the maximum hit. So once retail investors
Yeah.
become mature enough to take investment decisions and the projects become mature enough to protect retail investors rights, we should have a good outlook for crypto market after that.
Perfect. And talking about outlook and talking about trends, since you meet so many people from this sector, you interact with so many investors. Tell me something about women traders or women investors in crypto, because we usually do a lot of discussions on women participating in equities and having their investment portfolios made. But then, what's the story so far in the crypto market and women participation in it?
Right. So, a great question, Kavita, and maybe a woman should be answering the question, but thank you for the opportunity. So we've seen that a lot of women are actually actively participating in the industry. We have NFT artists, we have super women DAOs, we have exclusive
Wow.
meetups for women only now. My wife just went to one yesterday, but the aside
Oh,
from that, we've also seen reports of exchanges like CoinDCX saying that 14% of their traders are women, and maybe it will become 20% by the end of 2023. But it also I also feel like we should highlight the fact that right, how in traditional markets we see that one family member is operating 5 or 6 demat accounts which are created for each and every family member, right? So you have your mom, you have your sister, you have your dad, you have your brothers, but all of them have demat accounts, but you are the only person who's operating on behalf of them for
exactly.
diversifying the investment, for tax benefits, all of those things. And maybe this is happening in crypto as well, and we should not sort of ignore the fact that the 14% number that CoinDCX has, maybe a 5% or maybe 4% of them are actually women operating those accounts, and 10% are other people operating on behalf of
Right.
these women.
Right, right. So now, just one more question on the same topic, because we're talking about women investing. Do you think the understanding for crypto among women is more as compared to the knowledge they have of other investment instruments or maybe other traditional markets like equity or any other investment avenue?
Honestly, I believe that getting into crypto is far easier than getting into any other investment avenue, right? So what happens is that the
Okay.
women sitting at home, or the women who are like looking for other opportunities, will come across crypto and will be able to adopt it better and faster than any other market, because of regulations and because of entry barriers that we have put across other markets, right? So I believe that not just women, in fact anyone entering into the market will have faster adoption of understanding and investing in a crypto market than they would have about investing in a traditional market, for sure.
Now, since we're talking about cryptocurrency, we have you on board, and if we cannot ask about the cryptos that are doing well in the market right now or a right opportunity to invest, won't be fair to have you then. So, tell me something about the kind of coins that you're actually tracking these days, or are making headlines, or good time, good opportunity to put in the money. What with medium to short term time horizon, you're the best to recommend.
Right, Kavita. As a thumb rule, if I give you investment advice right now, I don't know what where I will be breaking some law somewhere, right? But of course, it's a very good question, and for
Yeah,
anyone
you never
watching,
know that.
would exactly anyone watching would want to know more
Yeah.
about this. So here's the thing, right? focus on the news, right?
Yeah.
Focus on who are building. Like, for instance,
Totally.
Polygon
Totally.
recently made an announcement that they have partnered with Starbucks. Starbucks is launching a digital
Yeah.
collectible platform called Odyssey, and entire loyalty program of Starbucks US will move on to Polygon. So it sort of shows the importance of huge markets, getting into huge players of the market, getting into open systems, decentralized systems, digital collectibles, right? Nike has made
Got it.
$185 million from just NFT sales, on their metaverse. So focus on the news and see
Wow.
who's actually building, and then forget about the price. Because if they keep building today, whatever price you buy the token at, tomorrow it is going to go up on value. That's a good assumption to have. So focus on who's building. Ethereum moved on from proof of work to proof of stake. It is building. Bitcoin is still existing. It has Lightning Network. It is building. Polygon partnerships with Starbucks, partnerships with Flipkart. It is building, right? So my advice to your viewers, Kavita, is go out there, check out the news, focus on who's building, and maybe invest in them. Also, don't put all your money together. Yeah.
Totally. Diversification rule. I think that's a golden rule. Works for all kind of investment portfolio and your assets also in it. But then I really want to understand the Polygon partnership with Starbucks. What are we talking about over here? What is going to be the end result and how does it look like?
Right. So, simply put, Starbucks has a loyalty program. What they want to do is they want to put your loyalty points on chain. When we say on chain, it means that it will be on Polygon blockchain. So people or anyone can see what are the transactions of points happening. They wouldn't know who's doing the transaction, but they can see the movement of coins from anywhere to anywhere. And it's a huge development because if you think about it, loyalty points are actually a secret trading secret for any industry player, right? They want to keep their customers loyal. They don't want to show the data to their competitors as to how many customers do they have and what kind of transactions are happening on the platform. For Starbucks to do it on an open chain and introduce digital collectibles, that can be bought and sold using these loyalty points, it sort of shows the industry's direction towards using decentralized and open systems, right? So and
Right.
also the fact that digital collectibles are going to be the future, and sort of Starbucks is taking the lead on it, and Polygon is the backbone of that, right?
All right, interesting. But Naimish, you will have to really wind up this conversation. I mean, you are one knowledge center when it comes to crypto. It's always pleasure to talk to you. Thank you so much for highlighting all the important aspect of the crypto market and guiding our viewers and helping them understand how to navigate their way for this kind of an investment. Thank you so much for being on the show. That will be all, Naimish, with you. Thank you.
Thank you.